You are listening to the Mining Stock Education Podcast, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I believe the sector is about to take off into 2020 here.
Welcome back to Mining Stock Education, ladies and gentlemen. I'm your host, Bill Powers. Thank you for joining me. Well, today I'm going to be speaking with my friend David Erfle of Junior Miner Junky.com. When I launched this show about 3 years ago, David was one of my first guests, and I've enjoyed corresponding with him over email and interviewing him periodically on this show. I look up to him and enjoy learning from him as he navigates these junior resource markets. So David, thank you again for coming on Mining Stock Education, and perhaps we could start off with you sharing your thoughts on the gold price and what are you seeing in the gold price as it relates to the junior mining stocks?
Great to be back, Bill. Thanks for having me again. It's really interesting what's happening here, Bill. We've had the junior sector has been decimated over the past few months, even though the gold price has been hanging up above 1450, and the GDX has held very, very well above the 26 level, which has now become really critical support. What we're seeing with the gold price is we're continuing to see consolidation of that huge move from about 1160 to 1560 in the space of about a year. So that's a huge move, and that needs to consolidate, and that's what it's doing. And we haven't seen any panic selling in shares. We really haven't seen any panic selling in gold. We're starting to, we're seeing generalist investors come into the space a little more. But I'm really impressed with how the gold price has hung up well here above $14.50 an ounce.
Previously, you've said that you look to Bear Creek Mining as kind of your bellwether stock. What is Bear Creek Mining speaking to you right now?
Yeah, that's funny you mentioned that. That's basically a silver optionality play, as their Corani project in Peru needs a higher silver price to be economic and to be financed and built. Well, basically, if you look at most major silver projects, they need a higher silver price. But it's got a very tight share structure, and it has some very intelligent investors, and it usually moves in either direction before the silver price does. Meaning, if the silver price is about to have a nice move higher, Bear Creek usually moves higher before it. And the stock is still trading at 52-week highs here, and it looks about ready to take off. That they recently came out with better economics on another feasibility study, and or a preliminary economic assessment, and the numbers got a lot better. So the project no longer needs $25 silver to be economic. Now it'll be economic at $20 silver. So the stock is doing really well, and not only Bear Creek silver stock, but the silver juniors in particular. You see SILJ, which is the silver ETF. That has been leading not only the miners, but has been leading the entire gold complex. So you've got the miners leading gold and the silver juniors leading the miners, which is very bullish for the short to medium term here.
When you see that happening and it speaks to the bullish outlook, do you ever try to profit short-term trading off of the silver gold ratio at all?
I watch the silver gold ratio like a hawk, like most do. I think it needs to get down to below 80 for the sector to really start to take off. It's around 85 right now, and it's starting to go in the right direction, which is lower. But yeah, I mean, once it gets below 80, that's when you're really going to start to see the sector move.
When you look at what's been happening in the last several weeks in the mining sector, what would be some bullish things you see occurring that would reinforce your view that we could be entering into an up phase pretty soon?
Well, there's three things, Bill. There's what I just mentioned previously about the silver miners, and especially the silver junior miners leading the sector. Another thing is the capital markets have begun to improve. You're starting to see some big bought deal financings come into the space. And the third thing is the merger and acquisition spaces really began to heat up. I mean, it started a couple Mondays ago when Barrick sold its 50% stake in its non-core Kalgoorlie asset, and then Newmont sold a non-core asset in the world famous Red Lake mine, and then you had Kirkland Lake announce a takeover of Detour, and now this morning you see an all-share deal from Chinese Xinjiang Mining, an all-cash deal of 1.4 billion Canadian for this company. So when you start to see more capital coming into the space, and you start to see mergers and acquisitions heat up, and especially when you see the silver juniors leading not only the miners but leading the entire complex, that's very bullish for the short to medium term.
With Newmont selling off one of their assets completely, and then Barrick 50% of that assets, they sold obviously to producers, cash flowing producers. But when they start to sell off some of those maybe second tier assets to a smaller micro cap company, do you have a strategy that you have in mind for how you might look at those as possible investments?
Are you talking about would I look at investing in the company that bought those assets?
Yes.
No, that's not what that's not what my area of expertise is. I like to look at the smaller juniors that have that are in the process of proving up assets that I believe will be purchased by a major. I know. Barrick's CEO, Mark Bristow, has not been shy about telling the market basically that they're going to be selling off their assets that they don't own 100% of, and also assets that do not produce over 500,000 ounces per year. So they're looking for big blue sky projects that are going to produce a lot of gold in the future. So but there's also a lot of other majors out there that are looking to buy projects. So I like to focus on the companies that I believe are about to be taken out, as opposed to the ones that have already purchased an asset from a major.
Kirkland Lake, as you know, is a high-grade producer. Detour Gold is a more of a low-grade bulk tonnage producer, and Kirkland Lake just bought Detour, and then the Kirkland Lake sold off as a result of it. So the initial reaction was negative. What's your thoughts on this combining?
I think it's a great acquisition, because basically what Kirkland just did was what the majors were doing at the top of the last bull market. At the top of the last bull market, these majors were buying assets that were not economic at the gold price that was at the time. So basically, the gold price had ran up to $1,700, $1,800, $1,900 an ounce, and these companies were buying assets that were large bulk tonnage that didn't make sense below those prices. But this was at the top of a bull market. So what Kirkland has done, they've done this. They've applied this strategy at what I believe is at the beginning of a cycle, as opposed to at the end of a cycle. So I think there's a lot more gold at Detour, and I think it's a really good move.
So we could assume that Kirkland is assuming there's a floor in the gold price right now, and so perhaps we could extrapolate that and say these major producers just in the last few weeks are assuming that there's a floor at this price point in the gold price. Would that be correct?
Right. Yeah. I've been on record as been saying this since like August and September, that these capital markets, they got burned in 2016 by coming in too hot and heavy too soon. And so now that they've seen really good numbers, Q3 numbers from these majors, a lot of them have upped their dividends. Some of them even doubled their dividends. And their numbers are really good at these gold prices. They're starting to loosen up their purse strings more. And I think the market is starting to come around to believe that this 1450 is is a bottom now, and once they really start to believe this, well, you'll really start to see more M&A pick up, which is starting to happen right now. But you'll see them buying into it completely when it really starts to pick up. So I do expect that to happen now. I mentioned back in August and September that it wouldn't happen until Q1. Well, we're just about into Q1 right now, and the mining sector normally picks up this time of year anyway. And the juniors, like I said earlier, have been decimated. So a lot of the ones that I follow and the ones that I own, they're acting like they're sold out, and they're already starting to make nice moves here, even though tax loss season officially just started this week. I think it started earlier this year. I think people got rid of a lot of their tax loss sells early this year. So I think a lot of these companies have already bottomed.
A company you cover in your newsletter is, and you've been public on record speaking about, is Novo Resources. In the last couple months, they've released a lot of news about their ore sorting technology. What's your commentary here, and is there any significance for the sector at large?
This is a company that I've owned for quite a while now. I was fortunate enough to get myself and my subscribers in before they made their discovery in Karratha. And unfortunately, on hyperbole, the stock got bid up too fast, too soon. And since the stock was bid up so high on basically hyperbole, it came down rather quickly, and a lot of people lost a lot of money. So this was no fault of the company. This project that they have is unconventional. It's an alluvial deposit that they can't drill, that they have to come up with things that have never been tried before, as far as trying to prove that they can mine this economically. And I believe that they're onto something with these sorting machines, this sorting technology, and that's what the market is feeling here also. Because if you take a look at the chart, it's got a really nice base, a year-long base that now it's trading at 52-week highs, and what they've done over here with these sorting machines it's revolutionary. I mean, if you listen to the interviews that Quentin Henney has done with various news outlets, with Corey Fleck and Jay Taylor, about the sorting costing just 26 cents per ton to sort, and with no water, so it's completely green. The machines only cost between $800 and $1 million Australian to construct. And not only that, but there's two companies, there's Tomra and Steinert Global. So these two companies are basically in competition with each other, trying to better each other's technology to get Novo's business. So you add that into the fact that I believe the sector is about to take off into 2020 here. So the stars are aligned here for Novo to have a really nice move. And I've been saying this for the last few years now. Even if you're not a shareholder, just if you're a junior, a speculator investor, you should be rooting for this project, because this thing is huge. The potential is massive. And if they've come up with a revolutionary and cost-effective way to mine this economically on a large scale, it could be if you could compare it to Diamond Field's Voisey's Bay discovery and what it did for the sector. That's a very real possibility, and I think the market is starting to wake up to that possibility.
With the size of the resource still unknown, do you foresee a way where they could even finance this to truly find out what they have?
Well, they've already have. Kirkland Lake already owns 25% of it. And they've got about $30 million still, and I think a big problem would be security, because there's this project is massive. It's out in the middle of nowhere, but it's in a top tier jurisdiction, and the big knock on it was, how were they going to mine this economically, since it's an alluvial deposit and you can't drill it. You can't really prove up a an NI 43-101 resource. It's, you just have to mine it. And that's what they plan on doing. It takes a long time to get mining permits there. You have to go through the Aboriginal life. You get an Aboriginal license. You have to get a mining license. It takes time, and they're going through the motions of doing that. And in the meantime, they've proved up that they've maybe found a way for proof of concept to mine this economically on a large scale with these sorting machines. Time will tell, and we're going to have more news out coming soon. But I think that the market's sniffing that out if you take a look at the share price.
Dave, when you're looking at a discovery play, and by that I mean a company that has put out some good holes, they indicate there is gold in the ground, possibly economic gold, and you're not already invested in the exploration company when they put out those first holes, talk about how you go about deciding your potential entry point.
Yeah, that's a great question. When you see a stock have a really nice move on a discovery, you have to take into consideration, number one, the management team. Does management have access to capital to where they can continue to prove this thing up? Are they going to be able to get a nice financing package, hopefully without a warrant? Because if they made this discovery that the market has taken notice of, there's really no need to issue a warrant. If you have the right management team that can attract the right capital into the stock. And you have to also take into consideration where we are at as far as the sector is concerned. Like if they make this, let's say a company has made a discovery like this in August or September, and the sector has already had a nice move, like it just recently had. You had gold go from, like I said, it went from 1160 to 1560 in the matter of a year. And you're thinking, okay, they made this discovery, but the sector looks like it needs to have a correction here. And let's say the company's going to need more money to prove this discovery up more. So you just keep following the stock. And also you have to take into consideration if there was a finance recently where they got the capital to make this discovery, then the shares are going to become free trading from the finance. And most times what people like to do is they sell their shares and they keep the warrants. So you have to know when those shares are going to become free trading. So whenever you see a finance done on a company, always make a note is when those shares are going to be free trading if you're considering a position in this stock. It's never a good idea to chase a discovery. Always wait for it to sell off. And all these things are a good thing to look at while you're considering a position. And I never buy rhino horns. Selling rhino horns is what you do in this sector. You don't buy them. You buy the fishing lines, and these fishing line sell-offs can happen to the best, to very good discoveries. They happen to very good companies because there's always some short-term bad news that's going to happen, or a finance is going to become up that the shares are going to become free trading. Whatever it is, you look for that opportunity.
And do you always wait when a good drill hole puts that company on your radar screen? And then there's the gap up in the share price. Do you always wait as a matter of principle for that gap down after the discovery to fill?
Absolutely. I'm glad you brought that up. I forgot to mention it. Yeah, there's usually a gap up on a discovery. And it's basically a rule that I have. I will not buy a discovery until a discovery stock until that gap fills. If it doesn't, via con Dios, it's gone. Best of luck to everybody who invested in it. There's always another train that is yet to leave the station that I can look for.
Yeah, I've emailed you about companies in the past, and you said, yep, I missed that one. But it's just the nature of this sector. But in doing so, you're just protecting yourself from potentially devastating losses.
Absolutely. This is, as you know, as your listeners know, this is a very, very high-risk sector. So it's your job to limit the risk as much as possible before investing in these things.
Yep. And one of the Rick Rollisms that I think applies here too is Rick has said that he's never had a 10-bagger in all of his decades of investing in this sector without that 10-bagger first falling by half, 50% at least once while he held that stock.
Exactly. That's why it's always best to try to get your original investment out as soon as you can. But there's a caveat there. You don't want to do it too soon, because if it's something that's really good, it's going to go a lot more than a double, because a lot of these people preach that you just go ahead and sell half on a double. Sometimes that works, and sometimes it's best to just wait a little while. It all depends on the stock and the situation.
And so that just comes down to experience and due diligence then, because Dave, I listened to an investor this was decades ago, but he was in his 20s at the time, where he made a couple $100,000 off of the Fruta del Norte discovery. And then after he sold, he was so proud of himself, and then he saw it run and run and run after that. Like, how do you discern?
Yeah. It's very difficult. And you know yourself, know your limitations. If you're okay, I'm a newbie, I really don't know that much in the sector yet, and looks like I got lucky with this one, then go ahead and sell half. If you're not a very experienced trader in this sector. But if you got a few winners under your belt, and you're starting to get some experience, you can let it run a little bit before you take some profits. It all depends, like I said, on the discovery. Novo's a great example. I was fortunate enough to get in before the discovery on that, and I waited quite a while before I took some money off the table.
Dave, as we conclude, any final thoughts in light of what we've talked about today?
In light of what we talked about, risk management is key. Always be taking profits. It's always easier to hold something once you've taken your original investment out of it. It's easier to hold it for the long run.
And you sleep better at night also.
Absolutely.
Well, Dave, thanks as always. Dave's website is JuniorMinerJunky.com. If you're not on Dave's email list, you don't have to be a paid subscriber to get on his free email list. He'll email you his weekly editorial about this sector. So go check that out.
Thank you for listening to Mining Stock Education. Please subscribe and share this show with like-minded investors. Connect with us at MiningStockEducation.com and sign up for our email list to stay in touch. Much success to you as you learn about, invest in, and profit from mining stocks.
The mining business is one that generates gigantic wealth. A good drill hole that converts might cost $50,000 or $100,000, and it might discover something worth a couple billion.
There is no sector that I know of that has offered up as many predictable circumstances where there was the possibility, certainly not the certainty, but the possibility of 10-for-1 returns, as there is in small cap and micro cap mining stocks. Concomitant with that, if you don't do the work, or even if you do the work and don't discipline yourself on the sell side, there are very few places in the world where you can lose as much money as quickly as in mining stocks too.
I just started to study up on mining stocks, and I just became fascinated, because this is such a tiny sector and it's so volatile that either you could do really, really well, or you could pretty much get blown out of the water really quickly.
The mining sector is a very risky sector. It can take your money very, very quickly. Don't fall in love with stocks. Don't be overly confident, and just do your work as best you can. Do your very best, but don't fall in love and don't get too overly confident, because that's a recipe for disaster.
I have met professional retail investors that have made a tremendous amount of money on the junior mining space. Some of them aren't accredited, and they spend their days researching, talking to people, being on the phone, pouring through financial documents, but it requires commitment.